What is a housing bubble? And is Austin in one right now? Housing bubbles are a recurring phenomenon in economic history, often leaving a significant impact on the economy and people's lives. They are characterized by a rapid and unsustainable surge in home prices, which can create a false sense of prosperity. This surge is driven by speculative buying, where people purchase homes with the expectation of selling them quickly for a profit, often ignoring the underlying value of the property. Historically, several indicators have been associated with housing bubbles, providing clues to their formation and potential burst. One key indicator is a rapid increase in home prices, often outpacing wage growth and inflation, creating a disparity between what people earn and what they need to spend on housing. Another significant indicator is easy credit conditions, typically marked by low mortgage rates, which make borrowing money more attractive and accessible. When borrowing money is cheap and readily available, it fuels demand in the housing market, encouraging more people to take out loans and buy homes. This increased demand, coupled with limited housing supply, further pushes prices upwards, creating a competitive environment for buyers. Low inventory levels, where the number of homes available for sale is significantly lower than the number of potential buyers, contribute to a seller's market, giving sellers the upper hand. In a seller's market, buyers often engage in bidding wars, driving prices even higher and making it difficult for average buyers to compete. This creates a cycle of speculative buying, further inflating the bubble and distancing prices from the actual value of the properties. However, bubbles are inherently unsustainable, as the factors driving the price surge cannot last indefinitely. Eventually, the factors driving the price surge lose momentum, leading to a market correction where prices start to fall back to more realistic levels. This correction can be gradual or sharp, often resulting in a significant drop in home prices, causing financial distress for those who bought at the peak. Understanding these historical indicators is crucial for assessing the current state of any housing market, including Austin's, as it helps in making informed decisions. By analyzing trends in home prices, mortgage rates, inventory levels, and other economic factors, we can gain insights into the potential risks and opportunities present in the market, allowing for better planning and investment strategies. Austin's housing market, a recent history. Austin's housing market has experienced remarkable growth over the past decade, transforming the city into one of the most dynamic real estate markets in the country. Fueled by a booming tech industry, a significant population influx, and a desirable quality of life, the city has become a magnet for homebuyers from all over the nation. This surge in demand, coupled with a relatively limited housing supply, has led to a significant appreciation in home values, making it a competitive market for buyers. From 2015 to 2020, Austin's median home price increased by an average of over 5% annually, outpacing the national average and making it a hot spot for real estate investment. This rapid price growth attracted both investors and homeowners alike, further fueling demand and driving prices even higher. However, the COVID-19 pandemic in 2020 brought about unprecedented changes in the housing market, altering the dynamics in unexpected ways. With mortgage rates reaching historic lows and remote work becoming the norm, demand for homes in Austin skyrocketed as people sought more space and better living conditions. The limited housing supply was further strained as construction slowed due to pandemic-related disruptions, creating a perfect storm for price increases. As a result, Austin's housing market entered a period of hyper-growth, with median home prices soaring by over 40% from 2020 to 2022, a staggering increase in such a short time. This unprecedented surge raised concerns about a potential housing bubble, with many wondering if the market could sustain such rapid growth. While the market has slowed down in recent months, with price growth reversing and inventory levels slightly increasing, concerns about affordability and long-term sustainability remain at the forefront of discussions. Understanding the factors that have shaped Austin's housing market in recent years is essential for navigating the current landscape and making informed decisions. By examining trends in median home prices, mortgage rates, inventory levels, and broader economic indicators, we can gain a clearer picture of the market's trajectory and what the future might hold for Austin's housing market. Median home prices in Austin. A 5-year overview. Analyzing median home price trends over the past 5 years provides valuable insights into Austin's housing market dynamics. This period has been marked by significant fluctuations and notable events that have shaped the current landscape. In 2019, the median home price in Austin hovered around $390,000, reflecting a period of steady growth. This was a time when the market was relatively balanced, with supply meeting demand and prices increasing at a manageable rate. As 2020 ushered in the COVID-19 pandemic, the housing market experienced a surge in demand, fueled by record-low mortgage rates and a shift towards remote work. People sought more spacious homes to accommodate their new work-from-home lifestyles, leading to increased competition and higher prices. This surge propelled Austin's median home price to an unprecedented $550,000 by the end of 2022, marking a staggering 43.9% increase since 2020. The rapid escalation in prices was a direct result of heightened demand and limited supply. This rapid price appreciation outpaced wage growth and inflation, raising concerns about affordability and potential market overheating. Many prospective buyers found themselves priced out of the market, leading to increased frustration and a growing divide between income levels and housing costs. However, 2022 witnessed a shift in market dynamics as the Federal Reserve began raising interest rates to combat inflation. This policy change aimed to cool down the overheated market and bring some stability to the housing sector. Mortgage rates climbed, cooling demand and slowing price growth. Higher borrowing costs made it more expensive for buyers to finance their homes, leading to a decrease in the number of transactions and a more tempered market environment. As of mid-2024, Austin's median home price stands at approximately $575,000, reflecting a more moderate growth rate compared to the previous 2 years. The market has now slowed down, with prices decreasing. While prices have begun decreasing, they remain significantly higher than pre-pandemic levels, underscoring the lasting impact of the pandemic-induced housing boom. The new normal for Austin's housing market is one of higher baseline prices, which continue to challenge affordability. Monitoring median home price trends remains crucial for understanding the current state and future direction of Austin's housing market. Ongoing analysis helps stakeholders make informed decisions and anticipate future shifts in the market. By comparing these trends with historical data, wage growth, and inflation, we can assess the market's overall health and potential risks. This comprehensive approach ensures a well-rounded understanding of the factors influencing Austin's housing market and prepares us for future developments. The impact of mortgage rates on Austin's housing market. Mortgage rates play a pivotal role in shaping housing market dynamics, directly influencing affordability and buyer demand. In the years leading up to the COVID-19 pandemic, mortgage rates were on a downward trend, reaching historic lows in 2020. This favorable lending environment, coupled with a strong economy, fueled demand in Austin's housing market. However, the pandemic-induced economic uncertainty led the Federal Reserve to implement unprecedented monetary policies, including slashing interest rates to near zero. This move further fueled the housing boom as buyers rushed to take advantage of ultra-low mortgage rates. As a result, demand surged, outpacing supply and driving up home prices at an unsustainable rate. However, This period of historically low mortgage rates was short-lived. In response to rising inflation in 2023, the Federal Reserve began raising interest rates, leading to a sharp increase in mortgage rates. This shift in monetary policy had a significant impact on Austin's housing market, cooling demand and slowing price growth. As of mid-2024, mortgage rates remain elevated compared to the lows of 2020, impacting affordability and making it more challenging for some buyers to enter the market. The future trajectory of mortgage rates will continue to be a major factor influencing Austin's housing market in the coming months and years. Inventory levels, a key indicator of Austin's housing supply. Inventory levels, reflecting the number of homes available for sale, are a crucial indicator of housing market dynamics. In Austin, inventory has been a persistent challenge, contributing to the city's affordability issues. For years, Austin has grappled with a housing shortage, driven by factors such as rapid population growth, limited land availability, and construction constraints. This imbalance between supply and demand has created a seller's market, empowering sellers to command higher prices and often leading to bidding wars. In the years preceding the COVID-19 pandemic, Austin's housing inventory was already low, hovering around a 2-month supply. A balanced market typically has a 6-month supply, indicating a healthy equilibrium between buyers and sellers. The pandemic exacerbated the inventory shortage as supply chain disruptions and labor shortages hampered construction efforts. This further tightened the market, fueling the unprecedented price surge witnessed in 2021 and 2022. Recently, we have seen a rise in inventory levels, reaching the highest point since 2011. As of mid-2024, Austin's housing inventory stands at approximately 5.4 months, indicating a significant increase. However, this mixed with a decline of new residents and the persistent increases in housing supply suggests that inventory will likely remain a key factor influencing Austin's housing market in the foreseeable future. In this video, we explored the historical perspective of housing bubbles, recent history, a 5-year overview, the impact of mortgage rates on Austin's housing market, and a key indicator of Austin's housing supply. Understanding these factors helps us gain a comprehensive view of the complexities and trends shaping the housing market in Austin. If you found this information valuable, please subscribe to our channel for more insightful content. Your support allows us to continue providing you with in-depth analysis and updates on crucial market trends. And don't forget to hit the notification bell so you never miss an update. Thank you for watching, and stay tuned for more.